Hey guys, Crypto here with a quick video on Cardano. So I tweeted back, it was over a month ago. Someone had requested a chart on Cardano, and I tweeted if the tweet gets 500 likes that I would post some charts, and it got 500 likes. And unfortunately, was just so busy with whatever was going on at the time that I forgot to make a post on it with charts. So because of the delay, I'm doing you guys one better, making you guys a quick little video here on Cardano. I appreciate the support, appreciate the love on the tweets. So this is the talk about Cardano. Starting right off the bat, guys, I gotta say, it does not look great. And I know this is probably not what you guys wanted to hear, but I'm just telling you guys how I see it. And hopefully that will be of use to some of you. But let me talk about why I say it doesn't look that great. If you have not yet seen my latest YouTube video on meme coins, I recommend giving that one a watch because the structure that I'm seeing here is quite similar to what I'm seeing here on Doge. So the analysis is almost identical to what we saw on Doge if you've seen that video. And if you haven't, I recommend watching it after you watch this one. But the idea is that we have on Cardano a very, very nice, clean 5-wave move here to the upside, which just means a uptrend starting off of about just shy of 2 pennies. Okay, very clean uptrend series of higher highs and higher lows, and that uptrend ended at $3.10. Okay, that is a whopping 150x. And since that top was put in, we've now been correcting the entire move off of 2 pennies, and thus far we've retraced pretty deep. I believe this is probably about a 92% retracement here. But of course, our move started at 2 cents. And here on log scale, you can kind of see how whenever we have these massive moves, especially in crypto and on a higher time frame, we want to look at things in log scale, because if I go off a log scale, this doesn't give you too much to work with, right? In terms of like depth of the correction. This looks bottomed. It looked bottomed here. It looked bottomed here. And it looks bottom, but it can certainly go lower. When you go off of log scale, that kind of puts things into a little bit more perspective. Again, we know that after any sort of massive impulse or primary uptrend, we can technically retrace up to 99% of that and still be bullish. Now, obviously, I'm not saying that we're going to go back down to 2 pennies here off of a high of $3.13, and I don't think we're going to see such a deep retracement. But what I am arguing here is that there is a valid perspective and I think a decently high probability of us not necessarily having put our low in for Cardano. And we'll go ahead and break that down here if that seems kind of crazy to you, because it really isn't that crazy. But just to give you guys an idea of what we have going here, we have obviously our lows, our last lows put in here. We have a sweep of the lows, the higher low held, and then we saw a nice move to the upside. However, it's worth recognizing that this move to the upside isn't quite impulsive. For what it looks like, this is just a 3-legged move off the lows, right? We have 3 legs, and then this is not an impulsive move. And this comes back to the nuance of being able to identify impulsive versus corrective price action, but this is not an impulsive move as much as it looks like one. You might think, oh, this looks like a 5-wave move, right? But you need to, if you haven't studied Elliott wave or the idea of what makes an impulsive move impulsive, then to a novice, this may look impulsive. This is not an impulsive move. This is a corrective move up. And following that 3-legged move, essentially, we're now in a range, right? So either two things. This is either an accumulation range or a reaccumulation range, or it's a distribution range, right? In the former scenario, if this is reaccumulation, then we should hold the green zone here and ultimately break out to new highs and continue to pump. If this, however, is a distribution range, then the idea is that we've probably put in our top here, and we may now have started to break down. And if that is the case, then we probably return back below the green zone and then go for these lows that have built up here. There is a higher time frame area of demand or support in this cluster between 12 cents and 20 cents. And that would be the downside target if we break down from where we are now. Now, I know that sounds kind of crazy. A lot of you may be thinking, how can you expect another 50% haircut? Guys, just to show you guys what has happened here, we'll compare this with Bitcoin real quick. This is Bitcoin. No, that's not Bitcoin. That's XRP Bitcoin. Let's go to the Bitcoin chart real quick. This is Bitcoin and current chart on Bitcoin. And you can see if I zoom out a little bit here, which I'll do here in a second. Okay. you can see that Bitcoin hit its local high here on the 14th of March. And that is where, on the 14th of March, that is where Cardano hit its local high as well at about, let me actually go ahead and make these the same time frame so that it makes a little more sense. Okay, so 12-hour chart and 12-hour chart. Again, this is Cardano. And you can see here that at the time that we hit our high here on Bitcoin on the 14th of March, we also hit our local high here on Cardano on the 14th of March. That high was at about 80 cents, okay? Since then, Bitcoin has been going sideways, okay? We have not actually broken this last low that I've been talking about for some time on Bitcoin, and we're going sideways essentially, okay? And Cardano and most other alts that I've talked about, this goes back to the video that I just did on YouTube about meme coins, rather than kind of going sideways, they've actually broken down, right? So again, top here, and then the first leg down on Bitcoin brought Cardano here. This next leg up on Bitcoin nearly fully retraced that move. On Cardano, only retraced about 50%. And then the next leg down on Bitcoin brought Cardano to new lows, okay? That's just under 40 cents at 39 cents. So essentially what we got here was we got a 50% drop to the downside in a period in which Bitcoin is essentially moving sideways, okay? Bitcoin has dropped from its highs down to the current low about 20%. Cardano about 50%, okay? And what's also worth noting is that this drop was from 80 cents down to 40 cents. That's a 40-cent drop, okay? To get down back to these lows from where we are now, the lows here at about 22 cents, we're currently sitting at 44 cents. We need just a 20-cent drop to get back down to these lows. We had a 40-cent drop off the highs. We need a 20-cent drop to get back down to these lows. So hopefully that puts things into perspective about how we can actually end up taking all these lows and going back inside this green zone. It won't take much, okay? Bitcoin, obviously, as I've previously said, sitting at these highs after a beautiful impulsive move, just like what we saw in Cardano here on the higher time frame. Here's Bitcoin. Beautiful impulsive move, series of higher highs and higher lows, and is now correcting that move, okay? So all it would take to see another dump down potentially on something like Cardano and a loss of this support and further bleed is for Bitcoin to make another leg down, right? At this stage, Bitcoin's been going sideways. Cardano has already lost 40 cents to the downside, while Bitcoin has lost only about 20%. If Bitcoin were to move up here, see some relief, and then make another leg down, it's likely that coins like Cardano are going to follow suit in one way or another, probably push up along with Bitcoin, and then if Bitcoin legs down, probably push down. And if we lose the green zone, the next area of interest is really the next green zone. That's about 20 cents lower. So certainly possible that that happens. The good news, we'll talk about that here in a second as well. The good news is that if we somehow manage to hold the green zone, then it's probably a local bottom. Now, I don't think that's going to be the primary scenario here. Going back to just the Cardano chart, you can see that what we have again is a very clean impulsive move, and anything down technically down to 2 cents is fair game. Realistically, that's not going to happen, but the point that I'm making here is just because we've seen as low as 20 cents doesn't just because we're down 90+% doesn't mean we can't go down a little bit lower. And this area here is a massive cluster of demand or support or whatever you want to call it, a very, very logical level for us to see a bottom form. And I think that's probably exactly what we're going to get. And what we have thus far, if I go to the higher time frames, is you can go on the monthly and you can actually see that we had this top put in, sort of a bleed down, a 3-month consolidation at this level here, and then we broke down. And we're just now retesting that level. It's a level of resistance, and thus far we're rejecting against it. You can see the big monthly candle that followed. So this looks like to me like a very strong bleed down, a dead cat bounce up into logical resistance before the final bleed down for Cardano. That's probably going to take us to the green zone where we end up basing out. And then we get the actual pump on Cardano, the actual impulsive move to take us to new all-time highs. So yeah, I do think Cardano is going to make new all-time highs, which means that anything like this is really just an opportunity. I think Cardano, like most alts, are going to make new all-time highs despite these massive drawdowns. But I do think that a lot of them, as per the recent YouTube video I just released, have room to fall further. And again, this kind of coincides with Bitcoin getting ready to pump to 100K plus in a parabolic advance. I think a lot of altcoins are going to essentially build a larger base like this, the same way that we put in a low, broke the low, wicked it, and then put in a higher low and pumped. I think we're essentially going to see that here, but on a bigger time frame on coins like Cardano, where they've put in that low, they're going to put in a lower low, then we look for a higher low, and then a pump, just on a much larger scale. So if we get rid of the lower time frame stuff here, just kind of to keep things a little bit clear, if I just remove these lines, what you have here, if you zoom out, is essentially a higher time frame base forming before the next impulsive move to the upside. On the lower time frames, the good news is that, again, recall we are technically at a level of support. And as per my recent Bitcoin updates, I think there's a decent chance we're going to bounce here soon, which means that we'll probably get some relief before that sort of a breakdown even occurs. What you're looking for on coins like Cardano is you have this gap here above these local highs before this breakdown point. So I'm going to make this, well, you have a gap there, then you have the breakdown point here. So what you're looking for is a push above these local highs into this gap and ideally into this resistance before the breakdown, okay? And so there's a chance here at 56 cents, I think, to position for such an outcome if you're interested. Now, again, if you are not a trader and you don't understand technical analysis or you're not very experienced with this stuff, then realistically your best bet is probably just to dollar cost average down at these levels if we get them. And I say that because as much as I think that's where we're headed, there's a chance that I'm wrong. There's a chance that we break up from here. Again, I don't think that's going to happen, but I can be wrong. I've been wrong before and I'll be wrong again. So if you don't understand how to actively adapt to price action as it develops the way that I personally do, then don't try to trade if you're not a trader. Use this as an educational lesson to watch how PA develops and hopefully learn how to prepare for these things in the future, but don't trade if you're not a trader. If you're an investor, a dollar cost average holder, then do what you do best. Dollar cost average if we do go down. You can always free up some capital if you're fully exposed and you don't have any capital to buy the dip with. You can free up some exposure. Yeah, again, this is not financial advice. This is just my honest opinion about how one should approach these things depending on their skill level when it comes to trading these charts. But that's what I think is probably going to happen on Cardano and a lot of other coins, as I've talked about in my last YouTube video. Guys, that's it for this video update. If you guys enjoyed it, please like and share. And if you haven't checked out my last YouTube video, go ahead and do it. I think it will be highly educational for a lot of you, and I think you guys will be able to take a thing or two from it. That's it for this video update, guys.